Welcome, everyone, to today's episode of Getting In, a College Coach Conversation. I'm Sally Ganga from College Coach. We'll be discussing some really timely topics today. During segment 2, I'll be talking with Gabby Tobias, a new colleague at College Coach, about the University of California Personal Insight questions, or you may know them as their essay application questions. If you are applying to the UC schools, I'm recommending that you start working on these questions now if you haven't already, so do listen in. And then for segment 3, Lisa Albro, longtime College Coach veteran, will talk about her journey to college as a first-generation student and kind of the added challenges that'll bring, things that she learned. And this is part of a really fun series that is basically stories from our team of how we all went to college. But for the first segment, by the way, if you're watching this on a recording, you'll see Stacy McFeeters, a member of our college finance team here at College Coach, and she will be giving us an update about the student loan forbearance, something I know impacts quite a few of us. So welcome, Stacy.
Thanks so much for having me, Sally.
Well, thanks so much for coming on. I mean, this is something that doesn't just impact families that I talk to, it frankly impacts people in my personal life. So this is a very big issue. So thank you for any insight that you can give us. So I guess basically the thing is there any update on the administrative forbearance around federal student loans? Let's start with that.
Great. Yeah, absolutely. So as most folks probably know, at the beginning of the pandemic, with regard to the CARES Act, one of the provisions that was included was a forbearance for student loans for student loan borrowers in repayment on federal student loans. So it started in March of 2020. That provision, which basically allows borrowers to take a timeout on their student loans, has been extended now 3 times. So the provision was expected to expire on September 30th, but about 2 weeks ago, it was extended now until January 30th, 2022. We are told pretty emphatically that this will be the last extension. So for those who are, still trying to figure out what to do about student loans, this is your sort of last chance to get your ducks in a row and enjoy this forbearance period. So yep, one more extension, but we're hearing that this is it.
Mm-hmm. So get ready to start repaying.
Absolutely. Yep.
Okay.
Absolutely.
All right. But at least this isn't like the mortgages where you have to, or not more rent, where you're supposed to pay all of it. You just restart your same payments.
Yep, exactly. So what we'll find is that sometime probably in December, early January, federal student loan servicers will reach out to borrowers and put them back on a repayment schedule for those who had been in repayment. What will be a little tricky, there's actually 2 things that I want to make sure we talk about today. Mm-hmm. For any borrowers who have left school or graduated since, in essence, January of 2020, who have not actually ever entered repayment, they will enter repayment for the first time. So they're going to have to be somewhat attentive to any sort of incoming correspondence. Most folks don't realize that they're not going to hear from their school. They're actually going to hear from a student loan servicer. So that's something that folks who have never been in repayment should be on the lookout for. Mm-hmm. And then one other tricky wrinkle that just came up in the last couple of weeks is we have 2 very significant student loan servicers who are going to be exiting the space. So it's entirely possible that folks who have existing loans with a couple of specific servicers might find that they're being shifted to a new servicer when they enter repayment in the January, February timeframe.
Mm-hmm. Okay. And what about the other student loan provisions intended to help borrowers? Are those still in place?
Yeah, they are. So the primary provision that most folks are sort of really keen on is the timeout, the forbearance, which basically means that there's no required payment. The other really sort of excellent benefit that everybody is benefiting from is that all student loan interest rates have been set to 0. So there's no interest accruing on loans currently. Mm-hmm. There's a few others, things like they've ceased all collection, things of that nature. But the 2 that most people are really zoned in on are the forbearance and the 0% interest rate.
Mm-hmm. Yeah, that 0% interest rate is key. That's huge.
Yeah, absolutely. And the reason for that, if folks are sort of not following, is if borrowers are able to make payments on their student loans, those payments are going directly towards loan principal. So even when you go back into repayment, that old sort of interest will not be accruing. It's not going to capitalize. So any payments you made are going directly towards reducing principal, which is obviously a great thing.
Mm-hmm. Yeah, definitely. Yeah. And with the additional extension, what should borrowers be doing now?
It's probably the question I want to hear the most right now. And it's one that we have certainly been talking to folks about. And there's a couple of things that folks should be doing. First and foremost, if you haven't in the last year and a half that this has been in place, taken stock of your personal financial situation, please do that. Take a look at what you've got out there. Are you able to start making payments either on your student loans or other debt sources? I would love to say everybody should be paying on student loans and they should just be piling money onto principal. And if you can do that, please do. But take a look across the spectrum of what you've got. If you haven't sat down and done a spending plan, or what people often refer to as a budget, take some time to do that. Make sure that you're taking care of maybe higher interest rate debt that might be out there. So for example, I just had a conversation recently with someone who said, I really want to pay on my student loans, but I have credit card debt at 22%. What should I be paying on? That's probably a really good idea, unless there's additional cash flow that allows payments across both. Certainly we, talk about strategies and maybe applying money across different areas, but I think probably the most important thing is now that things are normalizing a little bit for most folks and we're seeing sort of an economic stabilization, now might be a good time to take any extra cash flow you have and pay down either your student loans or other debt sources. We know that very, very few borrowers are making payments during this forbearance period. And while I understand for a lot of people it's impossible, if you can, you should. This is a remarkable time where you're basically allowed to pay down principal with no interest.
So even if you make a big payment, say in December, it's going to be this big benefit to you because in January, the interest is going to start reaccruing.
Exactly.
Okay.
So, if you owe $10,000 on your loan and you were to, for some, great ability to pay off $10,000, you're done. There's no new interest. There's nothing.
Right.
So that's definitely, if there's an opportunity and ability to do that, certainly do that. The one thing I haven't mentioned is, when I talked about other debt, non-federal student loans are not included in these provisions. So if you have private loans that, you may need to be making payments on, or maybe the lender has allowed the same sort of provisions, obviously that goes into the same discussion that we had. And that is, if you have higher interest rates or other terms that are not quite as reasonable, take care of those first.
Yeah. I mean, I think in general, paying off the higher interest always makes sense, but
yeah,
I know that there's other sort of philosophies out there about debt. Okay. And so I think that maybe we've covered this already, but just to make sure, what should borrowers do prior to going back into repayment after January 31st?
So it's a good question, and it's a little kind of beyond what we've already said, and that is be prepared. So if you have not heard from your loan servicer and you're somebody who's already been in loan repayment, be proactive. Get yourself set up to figure out what your repayment is going to look like. For most borrowers, when you go into repayment, so that's existing borrowers, new borrowers, whatever the case may be, they're going to put you into what is called a standard repayment program, which is basically 120 equal payments over 10 years. Think about right now whether or not that makes sense for you. Would you rather spread it out over a longer period of time? Are you looking at maybe taking advantage of some of the income-driven repayment programs? You can do all of that in advance so that when you do go into repayment, you're exactly where you need to be. If you're someone who is working in a public service field, public service loan forgiveness is still an opportunity, and hopefully they're going to simplify it. You need to file the paperwork that you need to have on file. So you need to make sure you're certifying that you're still working in that field. You should verify that your income still fits within your repayment term. So a lot of those things can be done in anticipation of going back into repayment.
Okay. All right, great. All right. I think that's good. Any last thing that's really important for you to say, Stacy?
I think, by and large, we live in the world we live in, right? So the question that I always get right now is, what about loan forgiveness? And while I don't have a crystal ball, there's a lot of conventional wisdom that there's not going to be a blanket forgiveness. There may be some, there may not be some, but realistically, I think people need to plan to move ahead in what we know today. So that means if you can make payments, make payments. When you do go back into repayment, go back into repayment and don't assume that your loans are going to be forgiven. If it happens in some way, shape, or form, it probably will be smaller than most people anticipate. And at least you've taken advantage of the opportunities that are in front of you right now.
Right. Yeah. That no interest opportunity is huge. I mean, I remember paying off my own loan and I mean, I was so lucky, right? Like I borrowed like 13,000 or something. Like it was just, but still like that first payment, I think I only paid off like $10. I
Yeah,
was
yeah,
like,
exactly,
this
exactly.
is horrible, And then
Yep.
towards the end, when I could have paid it off, I thought, well, I'm paying almost no interest at this point. So I just had it on
Exactly.
automatic. When I really needed it though,
Yeah,
I was
exactly.
paying, it was almost all interest. So,
Yep.
all right. Well, thank you so much, Stacy.
Absolutely. It's my pleasure. Great to see you.
Okay, and so now we're going to be taking a short break, but when we return, I'll be talking to Gabby about the University of California essay questions.